The average ETF pays barely 1.3% in annual dividends, just enough to buy a cup of coffee once in a while. But here's the shocker. A new wave of weekly dividend ETFs are dishing out 30%, 40%, even 50% plus in annual yields. That's not pocket change, that's portfolio-altering cash flow. Now, here's why that matters. Most ETFs make you wait 3 months for a dividend check, and a lucky few will pay you monthly. But weekly dividends? That's rare, and for income investors, retirees, or anyone who loves the idea of a Friday paycheck straight from Wall Street, it's an absolute game changer. Instead of waiting months, you're stacking income week after week while smoothing out market volatility at the same time. But here's the problem. Not every high-yield ETF is built to last. Some lure investors in with jaw-dropping yields, only to slowly erode your principal in the background. That's why in today's video, I'm breaking down the top 5 ETF picks for higher weekly dividends. Funds designed to pay more often, deliver higher yields than traditional dividend plays, and still give you exposure to some of the most powerful growth themes on Wall Street. If you enjoy this kind of content, make sure to like, share, and subscribe. It helps us reach more investors like you. And a quick reminder, this video is for education only, not financial advice. Always do your research before investing. All right, let's dive into the list, starting with my second ETF pick on the list. Meanwhile, number 1 is a must-have because of its eye-popping weekly payout. But stick with me while I unravel the second pick before moving over to the number 1 on the list, which you can't afford to miss. The YieldMax Semiconductor Portfolio Option Income ETF, ticker symbol CHPY. What makes this second pick CHPY so unique is its covered call strategy on the S&P 500. A play that allows it to squeeze extra income out of the market's biggest companies and hand that cash straight back to investors in the form of weekly distributions. Think about it. Instead of sitting on the S&P 500 and waiting for modest quarterly dividends, CHPY transforms that exposure into a steady stream of income that feels like a paycheck hitting your account every single week. With a dividend yield pushing over 30% annually, it's one of the most aggressive income-focused ETFs out there. And while the share price itself has stayed relatively stable, the real power lies in the total return, heavily boosted by those option premiums that keep piling up week after week. The expense ratio comes in at about 0.99%, higher than your plain vanilla index fund. But investors who chase consistency and cash flow don't seem to mind, because CHPY is doing something most ETFs can't. It's turning broad market exposure into a reliable, high-frequency income machine. For anyone who wants the safety of owning America's largest and strongest companies while stacking serious yield on top, CHPY isn't just a dividend ETF, it's one of the most talked-about weekly income plays on the market today. Now let's take a look at the number 1 pick on the list, the Ultra YieldMax Weekly Income ETF, ticker symbol ULTY. The big draw of ULTY is its unapologetically bold strategy. It's built to chase ultra-high weekly dividends that most investors can only dream of. While the average ETF pays a modest 1.3% annually, ULTY is regularly clocking in with yields north of 40% per year, sometimes even higher, and it distributes those payouts every single week. That kind of income flow transforms the way investors think about dividends. Instead of waiting months for a small check, ULTY creates the feeling of a constant Friday payday directly from Wall Street. Its approach is powered by an aggressive options overlay strategy, which captures premium income from the market and channels it into investor distributions. Of course, with that kind of reward comes risk. The share price of ULTY can be volatile, swinging hard in both directions depending on broader market conditions, and that makes it less appealing to conservative buy-and-hold investors. But even with price swings, the total return picture often looks far stronger once you factor in the sheer size of the distributions. Its expense ratio is higher than traditional ETFs, reflecting the complexity of its income strategy. But for many income hunters, the cost is more than justified by the results. What keeps investors excited about ULTY is its ability to consistently deliver those outsized yields week after week, making it a standout choice for traders and income investors who are willing to stomach more volatility in exchange for truly eye-popping cash flow. For anyone chasing raw income rather than steady growth, ULTY has cemented itself as one of the most talked about and sometimes controversial weekly dividend ETFs on the market today. My number 4 weekly dividend ETFs pick is YieldMax AI and Tech Portfolio Option Income ETF ticker symbol GPTY. Meanwhile, my third pick on the list has on a weekly basis paid $6.31 per share over the past 12 months. So stick around because it deserves a spot in your portfolio. What makes GPTY so compelling is the way it fuses two investor favorites, growth and income, into one ETF designed to deliver consistent weekly dividends without completely giving up on long-term upside. Most income ETFs sacrifice growth in exchange for yield, but GPTY takes a different approach. It leans on a basket of high-growth stocks, particularly in technology, AI, and innovation-driven sectors, and then overlays a covered call strategy to harvest option premiums that get paid out as weekly distributions. The result is a fund that doesn't just churn out income. It also gives you a chance to ride the coattails of some of the most powerful growth stories in the market. Current yields hover in the mid-20% to 30% range annually, and the weekly frequency of those payouts makes it especially attractive for investors who want regular cash flow alongside exposure to potential market leaders. Performance-wise, the share price has been volatile at times, which is to be expected with growth-heavy portfolios, but the total return looks far stronger once you account for the dividends hitting your account week after week. Its expense ratio is a bit higher than broad market ETFs, but that's the trade-off for its unique blend of growth holdings and income generation. What really sets GPTY apart is the balance it offers. You're not just locking into pure income like ULTY, nor are you simply betting on growth with no cash flow. Instead, you're tapping into both worlds. For investors who want to keep a foot in the high-growth tech game while still collecting steady weekly checks, GPTY stands out as one of the most innovative and forward-looking dividend ETFs on the market. All right, the third pick is GraniteShares Yield Boost Bitcoin ETF ticker symbol XBTY. What makes XBTY an eye-catcher is that it marries the red-hot world of crypto and blockchain with the steady discipline of weekly income payouts. Unlike traditional income ETFs tied to stocks or bonds, XBTY gives investors exposure to Bitcoin-linked assets and blockchain innovators, while layering on an option strategy that converts that volatility into consistent cash distributions. In other words, it takes one of the most unpredictable assets on Wall Street, Bitcoin, and turns it into a weekly paycheck generator. Yields have been massive, with annualized returns often climbing into the 40–60% range, depending on market swings, and the weekly payout frequency keeps investors engaged even during crypto's inevitable ups and downs. Performance-wise, the share price has mirrored Bitcoin's choppiness, but the real story is in the total return, since the high-frequency dividends soften the blow of volatility and keep cash flowing into investor accounts. Its expense ratio is on the higher side, reflecting the complexity of managing crypto exposure with an income overlay, but fans of the fund see it as a fair trade for turning raw volatility into hard cash. What really sets XBTY apart is its positioning. For investors who believe in the long-term story of Bitcoin and blockchain, but want to avoid the pure boom-and-bust cycle, this ETF provides a way to stay invested in the theme while collecting steady weekly income. For risk-tolerant investors looking for something beyond traditional equity-based dividend ETFs, XBTY is one of the most daring and potentially rewarding weekly income plays available today. My last weekly dividend ETF is YieldMax Crypto Industry and Tech Portfolio Option Income ETF ticker symbol LFGY. What makes LFGY a standout is its bold use of leverage to supercharge both growth exposure and weekly income payouts. Unlike more conservative dividend ETFs that rely solely on covered calls or traditional stock holdings, LFGY cranks things up with a 1.25x leveraged strategy on a portfolio of high-growth names, particularly in sectors like AI, semiconductors, and next-gen tech. That leverage means the fund captures amplified moves in its underlying holdings, and by layering an options income overlay on top, it transforms that volatility into weekly dividends that regularly clock in above 35% annually. For investors chasing cash flow, that's a monster payout schedule, the kind of weekly paycheck that feels closer to trading profits than ordinary dividends. Performance-wise, the share price has been choppy as you'd expect from a leveraged ETF, but once you add in the steady stream of distributions, the total return picture looks far more compelling. Its expense ratio is higher than plain vanilla ETFs, but that reflects both the complexity and risk of running a leveraged income-generating strategy. What really sets LFGY apart is its unique positioning. It's not just an income play, and it's not just a growth bet, it's both. For investors who want the thrill of high-growth tech exposure and the comfort of weekly cash payouts, LFGY has quickly carved out a reputation as one of the boldest and most aggressive weekly dividend ETFs on the market. It's not for the faint of heart, but for those willing to embrace a bit more risk. LFGY offers the chance to collect big income while riding the most exciting growth themes on Wall Street.